Okay, let's dive right into this explainer and demystify the entire process of formally closing down a Minnesota limited liability company. Whether you're moving on to an exciting new venture, getting ready to retire, or just wrapping up a specific project, knowing exactly how to properly dissolve your business entity is absolutely critical. I mean, it is literally the only way to protect your personal assets moving forward.
But first, let's put things into perspective with a pretty wild number. Did you know that 27.7% of businesses in Minnesota fail or close within their very first year? That is a staggering statistic, right? And it makes the dissolution process an incredibly relevant topic for us to cover. Closing a business isn't just some rare worst-case scenario. It's a totally normal part of the business life cycle for thousands of entrepreneurs. And doing it correctly? Well, that's what separates a clean break from a lingering legal nightmare.
So here's our roadmap for today. We're going to quickly walk through preparation and member voting, filing the dissolution statement, settling debts and accounts, tax and legal considerations, finalizing the termination process, and we'll wrap up with an important professional disclaimer.
All right, starting off with Section 1, Preparation and Member Voting. Let's get that internal agreement sorted out first.
Just to be crystal clear, today we are specifically talking about voluntary dissolution. This is an owner-initiated process governed by Minnesota Statutes Chapter 322C. This is very, very different from an administrative dissolution, where the state forcibly shuts you down because you forgot to pay your fees, or a judicial dissolution, where a judge orders the closure due to a messy lawsuit. Voluntary dissolution means you are in the driver's seat. You are the one deciding it's finally time to wind up operations.
Now, what's really interesting here is the stark contrast in voting requirements. Under Minnesota law, unless your specific operating agreement says otherwise, a multi-member LLC requires 100% unanimous consent to dissolve. Not a simple majority, literally everyone has to agree. On the flip side, if you're a single-member LLC, you might think you can just skip this step, right? Well, no way. You still have to draft a formal written resolution and sign it yourself. You absolutely need that clear, legal record showing the dissolution was intentional and officially authorized.
Moving right along to Section 2, filing the dissolution statement. This is where we notify the state.
I want to pause here for a second and clear up a massive misconception that trips up a lot of business owners. When you go online to find the forms, you're probably going to search for Articles of Dissolution. But in Minnesota, Articles of Dissolution is actually the specific legal term used for corporations under Chapter 302A. For an LLC, the correct legal document is called a Statement of Dissolution. You really have to make sure you're using the right form for your exact entity type.
Filing this paperwork with the Minnesota Secretary of State is honestly a pivotal moment. The second this document is filed, your LLC officially transitions. You are no longer authorized to conduct your normal everyday business. Your LLC still exists, sure, but only for the purpose of winding up its affairs. Think selling off equipment or paying off those final lingering invoices.
When it comes to actually filing, you've got a choice to make. You can file your statement of dissolution by mail for $35, which, takes a few business days to process. Or, if you want immediate peace of mind, paying a slightly higher fee of $55 lets you file online or in person for same-day expedited processing. Frankly, if you're up against a strict deadline to close out the business before the end of the tax year, dropping that extra $20 for online filing is absolutely worth it.
All right, Section 3, settling debts and accounts. This is where things get strict.
Minnesota law mandates a very strict step-by-step chronological order for how you empty out the company bank account, and you must follow this to the letter. Step 1, you absolutely must pay your creditors, and importantly, this includes any LLC members who made loans to the company. Step 2, once all those debts are officially paid, you return the initial capital contributions that members made when they first started the LLC. Step 3, only if there is money left over after Steps 1 and 2 do you distribute that surplus as profit among the members.
Please pay close attention to this warning. If you decide to skip Step 1, like if you just drain the LLC bank account and pay yourselves before paying your vendors, the bank, or the landlord, you completely shatter the liability protection that the LLC provides. Creditors can, and for sure will, come after your personal assets up to the amount you improperly distributed to yourself. Always pay the outside debts first.
Next up, Section 4, tax and legal considerations. Let's talk about the government agencies. Now here is perhaps the most common question business owners ask when shutting things down. Do I need to get a formal tax clearance certificate from the Minnesota Department of Revenue before the state will even let me dissolve? And the answer is a resounding no, which is actually pretty surprising because a lot of other states strictly require it. Minnesota does not require a tax clearance certificate to accept your dissolution filings. However, and this is a massive however, you absolutely must still file a final tax return to officially close out your LLC's state tax ID. Just because the Secretary of State lets you dissolve doesn't mean the Department of Revenue just magically forgets about you.
Minnesota also provides 2 optional statutory tracks for notifying people you owe money to, and this acts as a crucial shield against future lawsuits. For known creditors, you can send them a direct letter, and then they have 120 days to make a claim. But for unknown creditors, people who might try to sue you way out of left field later on, you can publish a notice in a legal newspaper. Doing this creates a really robust 5-year legal bar. If they don't bring a claim within 5 years of that publication, they are permanently blocked from suing you. It's just an incredible protection for your future peace of mind.
All right, Section 5, finalizing the termination process. Let's shut the door completely. These are the practical, everyday, winding-up tasks that just have to get done. You can't just walk away from the business. You need to formally close those business bank accounts so no automated fees hit you out of nowhere. You've got to contact the state and city to cancel any recurring sales tax permits or local business licenses. You have to issue final paychecks and W-2s to any employees. And finally, you have to sell off or distribute any physical assets, everything from the office chairs to the company vehicles.
Once those bank accounts are completely at zero and all the debts are handled, you've got one last piece of paperwork. Remember the Statement of Dissolution we talked about earlier? That was really just the beginning of the end. To truly finish the process, you must file a Statement of Termination with the Minnesota Secretary of State. By signing this, you are legally certifying that all debts have been paid and the winding-up process is 100% complete. This officially moves your LLC into the inactive file permanently. Bringing us to our final section, an important professional disclaimer to protect your future. As the source material explicitly advises, the bottom line here is that you really should consult with a Minnesota business attorney or a CPA before finalizing your dissolution. Every single LLC is totally different. You've got a unique debt profile, a unique operating agreement, and a unique tax situation. While we've outlined the statutory framework today, a professional can really make sure you haven't missed some hidden liability that's going to come back to bite you.
So I'm going to leave you with this provocative question to ponder. Are you absolutely certain your LLC's past liabilities won't follow you into your next venture? Taking the time to execute these formal dissolution steps seriously and getting the right professional guidance, well, it's really the only way to ensure a truly clean break. Thanks for joining me on this explainer, and hey, here is to your next great success.